connections with your financial future? Visit our Look no further than Independent Trading University. At ITU, we offer a diverse range of courses, from Forex basics to advanced technicals, along with comprehensive fundamentals education, mindset coaching, health and wellness guidance, plus stock and crypto trading strategies. That's right! Everything you need for a well-rounded trading journey, all in one place. Our mission is clear, helping you make extra income by learning the art of trading. Join us today at solo.to/independentTradingGuru and take advantage of an exclusive pre-sale. $50 for undergrad students looking to trade part-time, and just $75 for career traders ready to dive in full-time. With ITU, you'll master the art of making consistent income from the markets. This is your chance to start building a brighter financial future. Are you ready to transform your trading game and take control of your financial future? Look no further than Independent Trading University, your one-stop destination for comprehensive Forex education and so much more. Whether you're a beginner or an experienced trader, we've got you covered. We believe in a holistic approach to trading success. Gain a deep understanding of market fundamentals, master your mindset, and prioritize your well-being. We're here to support your growth every step of the way. And let's not forget about stocks and crypto. Discover exciting opportunities and learn strategies to make extra income. The best part? We're running a limited time pre-sale for new students. Don't miss out on this incredible opportunity to gain the skills, knowledge, and support you need to succeed. Ready to make connections with your financial future? Visit our website at solo.to/independentTradingGuru to secure your spot in our pre-sale today. Independent Trading University, where trading dreams become reality. It's time to start your journey to financial freedom. Don't wait. Visit solo.to/independentTradingGuru now. I have something truly special to share with you today. Have you ever dreamt of financial success and didn't know where to start? Look no further than Independent Trading University. At ITU, we offer a diverse range of courses, from Forex basics to advanced technicals, along with comprehensive fundamentals education, mindset coaching, health and wellness guidance, plus stock and crypto trading strategies. That's right! Everything you need for a well-rounded trading journey, all in one place. Our mission is clear, helping you make extra income by learning the art of trading. Join us today at solo.to/independentTradingGuru and take advantage of an exclusive pre-sale. $50 for undergrad students looking to trade part-time, and just $75 for career traders ready to dive in full-time. With ITU, you'll master the art of making consistent income from the markets. This is your chance to start building a brighter financial future. Are you ready to transform your trading game and take control of your financial future? Look no further than Independent Trading University, your one-stop destination for comprehensive Forex education and so much more. Whether you're a beginner or an experienced trader, we've got you covered. We believe in a holistic approach to trading success. Gain a deep understanding of market fundamentals, master your mindset, and prioritize your well-being. We're here to support your growth every step of the way. And let's not forget about stocks and crypto. Discover exciting opportunities and learn strategies to make extra income. The best part? We're running a limited time pre-sale for new students. Don't miss out on this incredible opportunity to gain the skills, knowledge, and support you need to succeed. Ready to make connections with your financial future? Visit our website at solo.to/independentTradingGuru to secure your spot in our pre-sale today. Independent Trading University, where trading dreams become reality. It's time to start your journey to financial freedom. Don't wait. Visit solo.to/independentTradingGuru now. I have something truly special to share with you today. Have you ever dreamt of financial success and didn't know where to start? Look no further than Independent Trading University. At ITU, we offer a diverse range of courses, from Forex basics to advanced technicals, along with comprehensive fundamentals education, mindset coaching, health and wellness guidance, plus stock and crypto trading strategies. That's right. Everything you need for a well-rounded trading journey, all in one place. Our mission is clear, helping you make extra income by learning the art of trading. Join us today at solo.to/independent-trading-guru and take it. You'll master the art of making consistent income from the markets. This is your chance to start building a brighter financial future. Are you ready to transform your trading game and take control of your financial future? Look no further than Independent Trading University, your one-stop destination for comprehensive Forex education and so much more. Whether you're a beginner or an experienced trader, we've got you covered. We believe in a holistic approach to trading success. Gain a deep understanding of market fundamentals, master your mindset, and prioritize your well-being. We're here to support your growth every step of the way. And let's not forget about stocks and crypto. Discover exciting opportunities and learn strategies to make extra income. The best part? We're running a limited time pre-sale for new students. Don't miss out on this incredible opportunity to gain the skills, knowledge, and support you need to succeed. Ready to make connections with your financial future? Visit our website at solo.to/independent-trading-guru to secure your spot in our pre-sale today. Independent Trading University, where trading dreams become reality. It's time to start your journey to financial freedom. Don't wait. Visit solo.to/independent-trading-guru now. I have something truly special to share with you.
Yo, 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 what's going on, brothers?
Hey, hey.
Man,
Well,
hey, hey, good to hear from you guys, man. It's a new year. How was your holidays?
Oh, it was great. Great. Restful.
Fantastic. Fantastic. Get into anything special?
Just did some traveling, got some good rest with people.
Okay. Some family time in?
Definitely, definitely.
Word. Let me see. Got you, bro. All right, Mike's in the building. Let me know if you can hear me, Mike.
yeah, we're good.
Word, word. All right, man. Kicking things off. It's a new year. We're gonna get into these markets again. One, I'm glad to have everybody here. Uh, it's been a fantastic year last year. At least trading wise, things went a lot as planned. That we talked about from the beginning of the year. We even had Tate do a goal analysis, played out wonderfully throughout the entire year. Mike was spot on with the DXY, especially that first half of the year. Paid out really well for me. Indices went really, really well. So, what we're going to get into is preparing for the next part of the year. And just a reminder to you guys, man, stay informed, right? Staying educated, having some things you're reading, doing some extra this year, going the extra mile for the new year. If you really want to get your trading goals accomplished, you know what I mean? You don't want to be wasting the opportunities that are present. Things are going to shift. It's going to be a different kind of year this year. We know Trump's coming in the office. We know a lot of things happen as far as potential concerns with war, different economic concerns. We got a lot of making up for the BS that happened with COVID. So you got to stay, up to date. You got to stay involved so that your trading will follow suit week to week. You can adjust as needed, following your trading plan as needed, adjusting your trading plan as needed. If your schedule changes and stuff like that, treat it like a business, and it'll treat you right. All right. Um, so those out there, in YouTube land, welcome as well. Please drop a comment, please like, share, get all the YouTube stuff, out the way. It's much, much appreciated. But to kick things off, man, we're going to go ahead and dive right into how things are looking, from an economic outlook, how things are going to be looking with the DXY coming up, where they're going to tap into, some of the Forex pairs that Mike might have lined up, and then we'll knock off, indices and take a look at some things that I'm seeing as well. But I'm sure, we'll agree. It's going to look like a pretty crazy year just to start off.
Yeah, definitely. I completely agree. I kind of feel like the first part of this year is going to be very interesting because we have to get used to a new presidency, right?
Mm-hmm.
Not just that, but there's how many millions of people voted for Kamala?
It was significantly less compared to the ones that voted for Trump.
Well, good point. Good point. Touche. But I think there was like what I think it was like what was it? I mean, he only won by like 3%, right? But there's millions of people that have to
Yeah.
now turn around and accept the fact that Trump is back in office. So, are there going to be some difficulties? Absolutely. From a humanitarian standpoint, yeah, we have to learn to be able to get along. While I feel like a lot of Trump supporters may turn around and become arrogant because he's back in,
Mm-hmm.
and then there's ones on the other side that are so upset that anybody, even myself, like I'm not a Trump supporter, but I am politically because he's a businessman. I am, but as a person, I don't support. I wouldn't go out and hang out with this guy at all. But that, from a far left position, that means no matter what, that I support him, and all of a sudden I'm a bad person, right? So you're two extremes of either arrogance because he's in office, or the other side that just decides that, hey, I don't like anybody because he's in office. We need to focus on what's in the middle. They want the two extremes, right? They want these two sides. They want us to be on one or the other. If we win, if we want to win, we have to work together and look in the middle, right? Look at what things could be rather than giving half truths, right? So, I think I discussed this a little bit when we had the call with Steve. Some of these things, like, you go on social media, be careful, everybody, with social media, because you're going to get a lot of trolls out there that are going to sit here and say, oh, Trump's in office, your taxes are going to go up. Do you understand what tariffs are? This, that, and the other. And that's one of the things I want to address at the very beginning, which is literally how tariffs are going to help us, right? They're supposed to be there to help, right? And if they were so bad, my question to the far left would be, why didn't Biden remove any of those tariffs that were against China from the Trump presidency beforehand, right? They were there the whole time, right?
Mm-hmm.
But Trump is going to be using tariffs specifically for Canada and for Mexico. I want to say Mexico more than anything because we have the immigration issue within this country. And he's going to use those to be able to have them bring their people back. The tariffs. So the tariffs, and what I mean by this, they're going to happen twofold. A, if the immigration gets under control from the Mexican standpoint, right? The Mexico standpoint, they control their borders, bring people back, etc., right? At that point, the tariffs get lowered, right? Now, the point is to not have a tariff at all, because what's being taxed? What's being taxed are the exports, right? So there's a higher cost to export into this country now. And at that point, all those businesses are going to be just raising their costs. And that's where leftists feel like, oh, all your costs are going to go up. They're going to go up, but for a short period of time, because not only if the immigration situation gets under control, but if these companies, like let's say, what's one of our biggest items that we import from Mexico? Avocados, right? We've all seen the commercial avocados from Mexico, right? So if these companies that are growing avocados in Mexico for cheap cost turn around and bring their business and grow the crops of avocados here in the US, you eliminate the tariff completely because it's now a domestic transaction. It's not an import or an export. You're literally just transporting between state to state to state. So that, in turn, on the good side, opens up companies here in the US, employs American workers, increases wages, gives livable wages to individuals, and then at that point, we have a strong economy. That's the part that's always left out. What good can the tariffs do? Those companies, to avoid the tariffs, will need to open up shop here on the U.S. soil. So that's the whole goal for it. Like, if people understood that, that's a legitimate way. So I don't mean to poke at the left side, any more than I need to. But when you're talking about COVID, right? In COVID, we had how many jobs that were open, right? That were lost, that were vacant. Mm-hmm. And now all of a sudden we're back to a normal increase, right? A normal increase or decrease. We're back to like jobs reports that were pre-COVID, right? We're not making up for jobs that were affected by COVID anymore. Why is that? Because a lot of those jobs were permanently eliminated, permanently vacated, and now eliminated from the jobs report. So every time a jobs report comes out, it actually looks like we're having a strong economy when we're still below the employment levels that were COVID. That's falsification, if you ask me. That's manipulation of reports, right? Okay, we're just going to scratch these jobs off because they're never going to get filled again. And not just that, but it makes our NFP numbers look a lot better. Well, guess what? This is how you actually fill those jobs that were vacated. So now we could actually end up seeing this could bite the left in the ass, because when we're sitting here having jobs that the last few jobs reports, we had one that was at like 15,000 in a month, which is ridiculous. We should always be in the hundreds of thousands. But we're going to end up seeing on Forex Factory, possibly over the next 4 years, a estimate of a certain job, like job report, right? An NFP report. Let's just say it's randomly at 200,000 or 300,000. We might see that thing come in at 1 million. Now you just bit yourself in the ass left, because now you're making what you wanted to look good by eliminating vacated jobs from reports to make your numbers look good. You make this man look a lot better because he's going to actually bring companies to open up shop here in the U.S. And if we do that, what does that spell? A strong economy within our borders. Right now, our currency is only strong outside of the U.S. because of the way inflation and costs of everything are going. Well, guess what? It's more expensive to manufacture on U.S. soil. So that means wages go up. We don't necessarily need a $20 minimum wage People will earn that because it's a US-based job, period, right? So at that point, you have a stronger economy, not only on the outside, but you have a stronger economy on the inside. And that's the difference in the cycle that we could be seeing here. So if we have that, I think I said as the example, people need to research what Toyota has done here in the US. Please take a minute, read it, look into it, research it. Toyota has been great with what they've done here. And they pay their wages very fairly to their employees, right? It can work. This is how it's supposed to work. It's not supposed to be, well, we're just going to write this off. We're going to eliminate these jobs, or we're just going to add these numbers in. We're going to move this money to this money, right? And then now all of a sudden we're sending money overseas again. Watch all this stuff. It's going to be interesting. So sorry for the long rant, but that's just my intro here is what we're looking at for the next few years. It's not going to be as bad as people think. It's always darkest before it gets bright. So are we gonna hit a couple of speed bumps at the beginning? Yes. Are we gonna be in a little bit of trouble? Yes. Are we gonna get out of it? I fully hope so, and I believe so.
Completely agree with you, Mike. You should have share open for you as well.
Okay, do you want me to go over DXY real quick?
Yeah, we can slide right into DXY, man.
Let's go. Let's do it. All right, so you guys are going to see a markup, because we're talking about the 2025 year, I'm going to start here with the weekly. I'm not going to necessarily go down into the 15-minute or 30-minute or anything like that. We're looking at a broad perspective here. And these charts that I'm showing right now, being based on the weekly, is going to show a bigger picture of what we could be seeing here, right? And these drawings have been up here. I mean, damn, how long has this teacup been up here? Say a couple years,
long time.
right?
Long time.
And the white lines on here are very, very, very important because these three areas here, I'll get rid of this. This is going to come into play here in a minute. But these three lines right now are the most important. This is a common support line across the board back from, what year is that? 1991. 1991. Okay. The highs, 2001. August of 08 for the lows. 11, right? Now we're back on the way up to retesting 2002, 2001, right? This double top here from this time. So what I was kind of talking about here with the strong economy, if we see a strong economy and we see a demand going for the US dollar, we're going to start seeing it going up. We have to read the DXY as supply and demand. The one thing that we could see a major shift, and I'm going to put an asterisk here for everybody, is that the supply and demand portion can technically change. And I'm curious, Zay, I'm going to ask you because you're informed of a lot of this here. What would be the one reason as to why we would change from a supply and demand position? What came into play over the past year?
I mean, besides 5 what?
5 letters.
5 letters. Now you just threw me off.
BRICS.
Oh yeah, we did talk about that. Yeah, so we do have BRICS coming up, and a lot of changes to the game with how they're going to be moving currency, at least trying to.
Right. Well, and the thing is we've become a supply and demand position on our chart and our value because of the fact that the world consolidates and settles their transactions in U.S. dollars.
Right.
We have
so we'll definitely have more usage stateside.
Right. We have over 41 countries that have eliminated that. So can we get to an actual value position where a bullish move means a strong dollar, not necessarily high demand? It's the value. We very well
could definitely happen. Could definitely happen.
Very well could. And I've been leaning towards that over the past couple of months, because of the way that BRICS is going, the way that I see the US currency happening, is that we may not be, what this kind of just entails summary, is that we may not actually be the globe's base currency anymore. We just get thrown into kind of like what happens with AUD, GBP, euro, this, that, and the other, based on actual value. Okay. That's actually a good thing. A year ago, I would have told you that any bullish move for the US dollar is bad.
Right.
Because that means high demand, and that means less in our pockets. When we have a demand for it, when we have a high demand for anything, it means we have a lower supply.
Yep.
Because we all want it, right? There's not enough supply to go around.
Yeah,
So
and it's been like that for quite a few years now.
It's been like that forever, because
Yeah.
our currency has been the base currency for the globe for forever, ever since the gold standard.
Yeah,
Okay?
and we saw how people reacted with COVID. Like, dollar grew dramatically, less people were spending money, they weren't sure what was happening next.
Right, and we saw the massive drop. Right, look, this right here. This is COVID. That's COVID right there. Now, that's interesting because look at how big this drop was, right? From 2001 all the way to February 08. That's a 7-year drop. That's crazy. But what does that mean? What do the drops mean? The drops mean higher supply.
Strong, yep. Market strong, at least on the company side.
Right. So, well, not necessarily that, but the fact that they're giving out stimulus checks, they're giving out unemployment, they're giving out this, they're giving out that. They're flooding the streets with extra dollars.
Yep.
But that all has to be recouped, because if people
For
understand how the Fed works, they're either the Fed will either print off or loan money to the government to distribute to everybody.
Mm-hmm.
And in that case, that's a bad thing. That's why we saw inflation going up so high. There was also a portion of it with price gouging, within grocery stores, this, that, and the other, food, gas, etc. Right? So fast forwarding here, if I see the US dollar going up and we're in a different cycle and we are no longer the globe's current base currency, and we see that the strength of the US dollar is actually a good thing because it's strong here on our soil, then yes, we could end up seeing this move all the way up. And I would love that if that's the case, because that means the money that's in my pocket is going to be stretched far above and beyond what it can be done right now.
Mm-hmm.
Okay. That means I can go buy a car. I can go buy a house, right? I can go do this. I can go on vacations because the money will actually be a lot stronger in my wallet than what it is right now. Okay. But remember I said that triangle was going to come into play here in a second. What do we have on this? We have imbalance. And if you look at any teacup, I would bet that, with any teacup that you're really looking on a high time frame with enough data, you're going to find somewhere in that teacup an inverted head and shoulders. Okay? So if I see an inverted head and shoulders, this is how this is going to go. What are we doing? We're filling the imbalance, right? So we're at a very, very interesting point right now. I feel like we're going to be on the increase, on the bullish moves for the time being, period. Like, we're going to here at 119 before we see any form of a drop. We already see that. We have the We have a form of a double bottom down here if you want to look at it that way, because we have the double top inside for the neckline. We have the retest. If you look at the candlesticks, even on the weekly, we had a form of a retest right down here. And now we're just off to the races. And why is that? We just had a threat of a government shutdown. That should weaken the economy. Absolutely. But we have reactions to other global activity. And right now, the Australian economy is terrible. Their Australian dollar is dropping immensely. In fact, it's reaching COVID lows. So in that case, the adverse to the Australian dollar going down is the US dollar going up. Okay, so there's not a lot going on in our country right now, except for this transition. That's the biggest thing right now. Everything else is normal. Now, we may see inflation dropping a little bit, right? We see this, we see that, right? But there's not really a lot of factors involved with what's going on right now to have this strong of a bullish move over the past 5 weeks, 6 weeks. So my feeling for this is, in sometimes we don't have an answer locally. We have to look globally. And in that case, because AUD is dropping, the dollar's going up. Our dollar's going up, which is great. Let that dollar go up if that's the case, especially if we're talking about an actual strong US dollar period and not based on supply and demand. Hey, let it go up. I'm with it. Prices are dropping a little bit here and there on things. I don't know if you guys have noticed it. I've got gas out here at $2.67 right now.
Really?
Yeah.
Wow.
Yeah. And it all depends. So this is the other interesting thing. People want to complain about gas prices. Now I know nobody realizes the difference in space and distance between my two cities, right? I live in Maricopa, Arizona. I am 25 minutes away from Casa Grande, right? Arizona. My gas out here is $3.19. If I go to Casa Grande, it's $2.67. Both of them are QT. Why would that be? Who controls the prices? It all depends on where the gas is coming from. If it's coming from California being distributed to one location, it could be lower. Travels less, right? That manufacturer of that gas could very well be giving, let's say, bullshit gas, allowing the prices to come down. You put more alcohol into it, it's going to burn quicker. This is what happened with AMPM. I don't know if AMPM is on the East Coast, but it was out here. Arco, AMPM, right? Go Google where they're at now. Majority of their gas was full of acetone and alcohol, and it burned like that, which allowed them to charge at a lower cost. But what were you doing? Because it burned quicker, you're filling up more often. Yeah, Arco, you're done. There's a couple of them still out there, but we have up and coming gas stations like QT, this, that, and the other. Just look at the cycle of what happens with some of these companies. But my point to this is, out here in Maricopa, our gas comes from Texas. Same company receiving the gas, two different distributors. So when people sit here and complain about gas, go look at who your local gas station is who's receiving the distribution and where they're from. Okay. There's more to it than just, oh, oil's going down. Oh, this, that. No, there's more to it. There's more to it. So ultimately, when we're looking at the moves on the US dollar, I'm looking at 119 through this whole year. Could be quick, could be slow. I don't know. We'll see. We don't react based on a clock here. We react based on time or price. So price tells me what I need to do when I need to do it. I'm there. Now, once it reaches this point, because we've seen moves like this. That happened fairly quickly. Now, this low June of 21, this high. November of 22 on the weekly. So we're talking about a little over a year and a half, right? That's all Biden territory. This hurt us, guys. This move up, oh, we got a strong dollar. Not when inflation is that high. That's only strong outside. This is a supply move or a demand move, right? Less supply, more demand. But I mean, shit, if we take just that, a year and a half. Oh, where is that tool? Hang on, I haven't used this in a minute. Was it this? Yep. Look, if we were just to take that year and a half, so it might be quick, it might be slow. We don't know, right? We've seen big moves like that in the past. But once it reaches this point, we see that this is a high rejection point as a resistance, ceiling, if you will. So at that point, the expectation would be to come down. And it could come all the way down here. Although, I'm going to throw this out here as well. If we don't see this rejection and we just see it move up, I don't want people to get surprised. Why is that? Because we're going to look at this move right here. Starting from here and this consolidated move right here. Okay. Any idea why I want to look at that? Steve, DeAndre, Zay?
Repeat the question.
That dark box that you're looking at on my screen right now. Any reason as to why I'm looking at that right now? What stands out to you?
I mean, you got buyers at that level. So, I mean, you're probably going to have to get back there for sellers to that's my first idea.
That's a great point. That's a great point. What did it cause? What did all those buyers cause? One word.
Well, they increased demand, so they increased demand on the product. So, you know, you have to adjust for the supply to meet demand. So that's kind of like my first idea.
Good point as well. Structurally, candlesticks. Don't think from the mind side. Think from just candlesticks right in front of you. What did it create?
I know you guys know this.
Triple bottom. Let's see. Let me see. I'm overthinking it. Oh God.
It begins with an I.
Are you asking for an inverted?
Imbalance.
Imbalance. Yeah.
So your point to thinking about this, Steve, when you said there's a lot of buyers that are in that area, is you are correct, because a lot of buyers, it needs to make up for the sellers. That's why I said it's with the sellers. So it's a great point that you made. To simplify that explanation, it created imbalance. Okay.
Got it.
Now, the key to understanding the imbalance, though, is did imbalance actually fill or did it not? Now, we can look at this and say it didn't fill because whatever goes up must come down, right? And yes, this support does need to be retested 100%. If it's not this support, it's this resistance, right? So this would be our zone that at some point in life, it needs to come down. But how often have you been on a chart and you're like, yo, it had to come down and it just kept going up? Or vice versa. It needed to come up, but it just kept going down. How many times have you been in the chart and that was part of the problem?
All the time.
All the time, right? So my point to bringing up this right here is because if you take the impulse move, which is from here to here, the support to the original resistance, what line did it retest? Here, let me do this. Ooh, I'm about to give out some information here. What's that? What did it retest? The percentage, anybody?
100%. 100%? No.
At 50.
The 50. I
Yep.
blacked out the 50 so you can see it because we're looking at this impulse move
Then that
and
double
the
bottom.
retest that it came down, right?
Yep.
It came down at 50%. Now, let's talk candlestick structure real quick here. You have an impulse candle. Let's say you have a bearish impulse candle. Are you entering in at the end of that candle for a sell?
No.
No.
I'm for the retest.
And what's the percentage you're looking for?
50%.
Exactly. You're looking for a wick or a retest of 50% of an impulse candle before you actually get into that channel or that move, like whatever you want to call it, because it may not be a channel, it may just be a pullback. But regardless, if you're looking on an impulse sell, you're waiting for a bullish retest of 50% of that, and vice versa for the other way. And then you're getting in for the sell for continuation, right? Well, guess what this is? It's an impulse with the 50% retest, and now we're off to the next highs. So that's why I say this is strong enough to keep this going all the way up. Once we get here, of course, we're going to react. But what are we going to react to? We're going to start looking at all these levels like this that would need to be retested as a support, right? Once it comes down, we could be looking at this as a resistance, even like this right here, this zone. And it's funny because if you see where I'm clicking, I use this high and I use this high, right? Look at all the activity that happened into it. That could be a zone where we say, all right, we're only coming right down to here. And then taking right back off, right? Being that this is on the weekly, all we're looking for is right now is this move up all the way to 119. That's all we're looking for, right? On the smaller time frames, we give out trades. We look and make our money off of that. But the expectation off of the weekly is that we're still going up. We will react to trades just like we did here, react to them when it gets here. Where's it going to go, though? It could go in many different ways. And this is where our economy is going to be tested. By this time of it either reaching here or reaching here, by this time, we're going to know damn well where these 4 years are going to be going. There's going to be a lot of events that are going to happen in regards to this. A lot of things that could be taken down, a lot of resets happening. But I asked this in the call with you, Steve. If we have a strong economy with a strong dollar, what are we going to see for the time being? We're going to see the US dollar going up along with the stock market. We haven't seen that in a long time. We may have seen it during certain news topics, but the expectation from a correlation perspective is the fact that the US dollar, based on supply and demand, when we're looking at a bearish move, that is high supply, making it weaker because there's so much more in circulation. By having much more money in circulation and the US dollar going down, that allows us to freely invest money and do what we want with it because we have a lot of it. When we see the US dollar in a supply mode or a demand mode where it goes up, then at that point we have less to play with. You have less investments. You have people protect their money. And then at that point, you see the stock market going down. So majority of the time, you would end up seeing adverse reactions to each other. Where if we have a US dollar that's strong on the outside, but we also have a US dollar that's strong on the inside here on our soil, we could end up seeing both indices and the US dollar going up, which is going to be interesting. I feel bad for the rest of the world if that's the case, because now we're getting back to having America being great again. Right? We have our dollar, our currency is strong outside and in. Can't mess with us at that point. So, are there any questions in regards to what I went over? Anything that may have popped up, maybe from a news perspective? You know, like, I'm curious what's on your guys' mind at this point.
Well, I'm just thinking about correlation. So, you have that $100 zone that you suggested. So I'm just thinking, okay, so if we know that if it goes up, stocks go up, how will that, affect the Forex pairs in relation to this potential rise?
Well, that's a good question. So, in just this bullish move that we've had from October to now, okay. Let me get rid of some of these lines here. Zoom in. This actually becomes an easy topic once you start understanding the correlations, right? If I take just from October or September, it looks like, yeah, once I zoom in, it's like September, right? September to now. That's what, 4 months? September, October, November, December, part of January. So yeah, we're literally talking 4.5 months. This is why I have this list right here. These are all individual currencies, right? Look what happened here, September to January. This should be, in my opinion, the US dollar and AUD, the Australian dollar, that correlation should be probably everybody's primary correlation. Because in that case, even though they may move slowly, because there's not a lot of volume going through the AUD network, right? Not a lot of movement. When everybody's trading physical currencies, they're trading euros, right? And I want you guys to think of this from the outside looking in, because one of the factors involved in how the Forex market works is not only what gets put into these charts. If I'm traveling, right? If I have to take my US dollars and convert them at a conversion station in that country or before I leave here. Travel destinations. Europe is far more popular as a travel destination than Australia. Let's be honest. So all the currency from tourists that's being exchanged, that's a factor involved in what we're trading here, right? There's multiple hands in the pot as to what causes the moves here. So when you're thinking of the economy, when you're thinking of what's being exchanged, there's not a lot of activity in the AUD sector. So it allows for the strength of the US dollar to manipulate it that more. Euro USD or the USD versus Euro as currencies themselves, you'll find that there's a lot of correlation. There's a difference between not a lot of volume and too much volume that can cause consolidations. Okay. When you have a lot of people, and this is where I use the example and the explanation of, like, let's say Grand Central Station. You guys have heard me use this before, right? If I'm traveling on Grand Central Station and I enter in the train station from the front doors and I got to get to my train, if I'm traveling on Thanksgiving, it's going to take me a minute and I have to plan for that because I'm going to be stopped. There's a lot of people in it. But if I travel on just a random summer day, I can get from one place to the other real quickly, right? You got to think of that congestion. Think of the people that are involved in that, right? Think of the crowd, right? Another way to look at it is crowd. So the bigger the crowd, that's your Euro USD. It may move in choppy formats a lot because there's a lot of people involved in this, a lot of buyers, a lot of sellers, right? When you're talking about AUD, the only reason why it could move fairly slowly is because there's not a lot of people there and it's relying on just the US dollar to cause the moves, okay? Regardless, this correlation is absolutely perfect in my sense because when you're talking about the USD and AUD 100% going against each other, this unlocks all your AUD pairs. Because if we see USD going up, what are you going to do with AJ? Sell it. What are you going to do with AN? Sell it. AU, sell it. Because AUD is weak in that sense. That also unlocks the opportunity to sell. And what was that pair that I gave you the other day, Steve?
It was what was it? AUD USD.
Nope.
What was it?
Try GA. It was GA. And the reason I gave you that is because during New York session, GA moves just like the DXY because of the fact that AUD is so strongly correlated against the US dollar that if the US dollar is going up and AUD is going down, you're going to buy GA. Look at where this was at. July of 24, December of 24, right? So we're in that bullish move, that same bullish move that the US dollar had. So when you're talking correlations, understand what works with US dollar and what goes against, and it becomes fairly easy. When you're looking at the euro, like when we're talking about currency correlations and we're becoming strong on the outside and on the inside, that's when you're going to start seeing Euro USD really decline. Where's my Euro list? There it is. And look at where we're at right now. By the way, what are we doing right now in this? I just asked this question before. What is going on? What did this impulse move create? What are we feeling?
Feeling an imbalance.
Yes, sir. Yes, sir. So, of course, when we're looking at Euro USD, we're looking at this as the main support. But when we're taking into effect what I had just talked about, which was literally what is being retested, we're at a crucial point for the Euro USD at the 50%. This is going to do, of course, one of two things. It's either going to continue or it's going to bounce off and go up and being strong enough to come up, leaving the rest of this imbalance of retesting open to be able to come back down at some point. Right. So the way that this looks, though, is starting to break that 50%. Oh, damn, I didn't want to get rid of that. I wanted to get rid of the box. There we go. It literally So if you look at, in fact, I'll get rid of this. If you look right here, this was a form of support, was it not? If I were to go in the smaller time frame, that one doji candle, which I feel bad for anybody that was selling during that. Because that doji candle is absolutely beautiful.
Yep.
You have
I'm already just loving the wicks for the inverted off of that support right there.
yeah, absolutely.
Yeah.
But if anybody was like, holy shit, I'm getting into this, and they saw this drop over the span, this is a week, by the way, if they saw this drop for this wick, right, and they got into a sell, they got screwed. This is a perfect evening star type setup that ended up just causing continuation. But what did it also open up? Actually, it's bigger than that. There's that much of that fair value gap that's not filled. So being that this would be like, if I looked on a smaller time frame, what made this up, it's probably consolidation, right? And then we had a drop. This is all support. This is all a form of support. So if we retested that, let's take a look at where we're at now. We broke it. If we break support or we break resistance, when we break that level, what are we looking for after that?
Retest. Break retest.
We'll break with the retest, but what happens after the retest?
Continuation.
Exactly. We broke the support, so we should be looking for retest. We look for continuation. We look for the entry off of the retest, right? And boy, do we have some stuff to fill here. Because I feel like this is probably going to end up retesting here, then dropping. This is a heavy support right here, guys. Which means, I mean, in that case, when you're looking at, highs and lows and whatnot, that could also definitely mean that we're going to see a small little pullback on the US dollar, which would make sense. We've been going up for the past 5 weeks, 6 weeks. Definitely need to have some form of a pullback, right? Otherwise, you could just buy anything that's USD and just make money. They don't want you to do that. The retests are there for fair opportunity for traders to get in, along with being able to take people's money that act or that react on an instinct of emotion. Okay. Now, this is a long way down, but it doesn't surprise me because AUD USD is on that position. Same thing, right? What do you think is happening with GU? Oh my God, we're right there. We're dropping, but see, GBP has been fairly strong outside of like the other compared to the other currencies for a little while. But we're seeing the same drop. It might be a different position, but what does that mean? That means that if we're looking at this pattern, we're still, in fact, this actually technically comes all the way down to here. This is a rising wedge. Rising wedge causes what type of a move? Bearish or bullish?
Bullish.
Bearish.
No, bearish. Sorry.
But then again, what level does it have to test to be a legitimate fill for a rising wedge?
That 50%.
Exactly. So guess where I would be taking GU? 50%. Regardless, for where we're at right now, is jumping off of a higher cliff than, let's say, AUD and Euro with the USD. But regardless, we're on a bearish move. We're on a bearish move. So we can still see this come down. And how, because of the way that GBP is globally as far as a strong currency, what wouldn't surprise me is that if by the time this reaches the 50% for GU, that if you look at Euro USD or AUD USD, those are at the bottom retest of their supports, right? Because GBP is stronger than those currencies. So what we see is a 50% retest here. If I go back to Euro USD, because it's so far more ahead, we could see it retesting this, creating a double bottom. Right? Now, if we see the double bottom on this high time frame, what can we expect for USD if Euro is going to skyrocket after that?
USD is going to drop.
A massive drop. So let's tie it all in together. Let's go back to DXY. We see the move all the way up, first to here, of course, but we see it come all the way up to here. Then we see some form of a drop regardless. Does that help with correlation?
Yeah. Definitely. I'm
I
trying
mean, from a chart perspective, there's other factors that go into correlations, right? Like how gold correlates with JPY or AUD, right? There's things like why, and there's reasons for those things in the back end, in regards to supply. You know, the way that AUD works based off of the supply of gold could have an inverse effect on other currencies, right? There are things like that that are involved in all of these things, especially when you're talking about precious metals or commodities, so to say. But as far as a currency to currency situation, we can literally utilize just the DXY to correlate with many other pairs. And how many pairs does the trading plan require you to have?
Only three.
Three. How many pairs did I just unlock right now by just going over the USD? Let's see, all of AUD, Euro USD, GU, right? Anything that's XXX USD, I just literally unlocked like 10 different pairs.
Right.
Some of those you have to be very patient for, like AU or God forbid anybody trade it, but UCHF, right? UCHF is boring. You know what? Just for shits and giggles, because I haven't done it in a long time, I'm gonna actually look at UCHF. Hey, it's been fairly bullish. I don't even know when I had this on here. Oh my gosh. I have no idea when I put this on here. And it literally is bouncing off the 61.8 right now. But UCHF literally works simultaneously with the DXY during USD session anyway as well. So this is one of those that if you're patient enough, you can trade it. I don't like UCHF at all. I really don't. I wouldn't recommend it, but regardless, it's there. What about UZAR? What are we looking at UZAR? Oh,
God, I haven't touched user in a hot minute.
me either. But what is UZAR looking like right now? when this line loads, so this is the weekly of DXY, right? Look at the same lows. This is a low here. It's a low here. This is a low here. It's a low here. This is a high. This was a high, although there was a higher afterwards, right? So, I mean, you can look into unlocking, what's it called? Exotics, right? Be aware, though, that the tariffs will affect exotic pairs, especially like if you're talking about the peso, USD MXN very well could be. This is straight in the Mexican peso. Look, this thing was dying for a minute. It came back up, of course, because USD was coming up. But for a minute there, Mexico was getting strong on its own. This doesn't look like anything USD-wise. A lot of consolidation. There's a lot of growth, but this one is one that definitely could be affected if you're looking at what's going on with tariffs with, let's say, avocados, right? Stuff like that. That could affect the currency exchange and making our currency more in the demand because they're going to raise prices, right? So those are factors involved with some of these. So some of these pairs, you got to look into the economic situations rather than just the chart portions, but some of them literally just move off of chart portions. So I would definitely say if we're looking at what is important to keep in mind here, keep in mind the tariffs in the countries and what's being tariffed, right? Look at these countries that are in turmoil, right? We still have the fight over with the Ukraine and Russia, right? That's still going on, right? I forgot.
As far as I know.
Look, all of a sudden, these things are not forefront of the news anymore, by the way. Kind of funny. But as Forex traders, we pay attention to those things because we need to understand when money's being sent over, how is it going to affect imports and exports, and not just that, but how is it going to turn around and whatever happens over there affects our economy. How's it going to affect our soil and our economy? So I would just definitely suggest, like I said, this is a year, and the next 4 years could be a great time to learn about world events. If people don't focus on news or haven't focused on news in the past, this would be a good time to do it because we're going to be living in a recovery time, right? We're still recovering. I don't care what the left says. We're still recovering. But also we're going to be probably flipping into a different cycle, and we have different variables involved, including BRICS, right? Including crypto. The whole thing with crypto is about to take a smooth move here in a minute because what was that post you just had the other day? Trump meeting with Ripple's CEO.
Yep.
Yeah, that's huge. That's huge. So when you're sitting there saying, what am I going to invest in? Hey, XRP is a great one. Algo, Sol, right? Whatever you're looking at, just make sure that those cryptos that you are investing in are mainly a part of ISO. If you're using those ones, you're going to have your ups and downs, but you're going to eliminate the possibility of rug pulls because those currencies that are involved in ISOs, in the ISO system, they're going to be around. They need to be around. So rug pulls are pretty much off the table at that point. Look what happened with the Haktua girl. You guys know what happened with her?
Yeah, she got in the pump and dump. Basically, I guess a rug pull out. Got in trouble with that.
She robbed mad people, bro. And then went dead silent. She went 0 dark 30 for 2 weeks. because people were pissed. But she had her own coin, got paid, dipped. So, I mean, I'll be the first one to say I had Safe Moon, trash. I
Yeah, I
have
did too.
I have one NFT, and I got talked into that because NFTs are bullshit. NFTs are bullshit. They're all rug pulls. So the crypto game, and I feel like I kind of feel like that in this sense right now for understanding the ISO system and also the business side of it. I think Trump is going to actually push towards crypto. You're going to start seeing him supporting crypto a lot more. That's another thing with it. 4 years doesn't seem like a long time, but a lot can happen. But ultimately, I feel like we're in a better position than probably what we were in for the past 4.
Agreed. Completely agree. If you are looking at crypto, I mean, he said it with Trump in office, with Elon taking a position, with Trump's blessing, you're bound to see some major moves. Now, does that mean we won't have any drops? No. Would I go like invest today? You know, small scale, but wait, I would wait. I would wait. I think we're gonna have a nice drop again because this is what normally happens. This is what has happened. I've been in the game with crypto since like 2017, when it was Bitcoin was like 17,000, everything was up, and then immediately, they came down and then back up again. So anticipate the same kind of reaction, the same kind of moves. Um, ISO 222, same thing. Those are the major plays. We've talked about that for the last, 2 years now, to look at the ones that have regulation, have utilization, that will be pushed. I mean, they're talking about in regards to real estate, how transactions will work, how our daily transactions will work. I think even how we, get gas and whatnot. So pay attention to that. Pay attention to what Elon plan on using in the long term. He's big on Doge. We know that. Um, so keep an eye on that. Doge had I just found out about Doge's little acronym as far as the government was concerned. So if you get some time out, do some research on Doge, because that could really turn into something. But as always, Mike, that was great. I appreciate you, bro. Really breaking things down.
Real quick. Speaking of Doge.
Yeah.
So I can't stand it. I think it's bullshit. I do. But its biggest strength is also its biggest downfall, right? Which could throw it either way. Any idea what that factor is with that currency coin? Unlimited supply. It's the only crypto that has unlimited supply.
Really?
Yep. If you look at the market cap on any crypto pages, like for Doge, there is no market cap.
Wow, that could backfire quick.
That's why I hate it, because people put it. People are buying a whole bunch of coins, right? They're buying Doge, they're holding Doge, this, that, and the other. But if you don't have a ceiling, then how can it even be valuable? Because then at that point, there's no demand. Everybody's going to have whatever they want to buy. It's literally just based off of people spending a lot of money on it that causes it to go up. There's no reason to have a high supply, or a low supply. There's unlimited amounts. That's what creates value in certain things, is supply and demand. If you don't have enough of something, the price will always go up. So if you have an unlimited supply of it, how can the price actually go up? That's my thing. It can be easily manipulated, and I don't like that either. So like I said, I'm not a big fan of Doge, but I understand Elon does like it. He does support it. My actual theory, because of the fact that Bitcoin is at market cap, there's still some to buy, but overall it's literally at market cap. Once that market cap is fully reached, you can't buy Bitcoin at that point. It's reached.
Right.
It's done.
Right.
Right?
Right.
So, I mean, unless it continues to increase if they decide to with miners and whatnot, but that shit costs so much money.
I mean,
Whatever.
you're gonna break the bank
But
for that.
my theory for Doge was that Doge, what was it, like 4 years ago that I thought about this? Doge could replace the US dollar completely. It could be a good alternative to the US dollar because at that point, you don't have to borrow money from the Fed. You don't have to print money from the Fed. You eliminate a lot of inflation. You eliminate a lot of increased costs based on price gouging because of supply and demand. Why? Because there's an unlimited supply of this cryptocurrency, right? So if my paycheck calls for 500 Dogecoin, I'll always get my paycheck. I don't have to worry about outside of performance. I don't have to worry about this, that, and the other because I'll get a raise or I'll get fired. That's all strictly on me, right? But I don't have to worry about layoffs or whatever it is because, at that point, it's strictly performance based rather than we can't afford to keep these people because if you're using an unlimited supply of a currency, you have no reason to fire people at that point based upon some demand. And I think that it would be great if that were the case, but I haven't heard anything since.
Close to
Anything about that, you know what I'm saying?
Yeah.
So is it on the table? I don't know. Elon's a smart guy. If I thought about that, I can fully feel comfortable saying that Elon's thought about it. There's a reason why he's a multi-billionaire and I'm not.
He's got plans for it, or he's completely got a major rug pull going on.
Right. Exactly.
So cool, let's hop into these indices. Dude, they're really gonna follow suit. If you're following the dollar, I think things look really good. But first we do have to clean up the year. We've had a phenomenal year for US 30, NAS, really bullish this year. Let's go ahead and pull that beautiful candle up. Here we go. So we talked about this last year that we'd get, a potential continuation push, which is exactly what we got. But now we're hitting new highs. We're still in, unmitigated territory. So I'm looking for personally that retracement, getting these imbalances that are potentially in here touched base before getting that continuation to the top side. With that being supported by our normal viewpoint with the dollar and, indice correlation with the dollar going up, we should see these come down. Now, the dollar continues beyond, was looking at 110 as we anticipated even further movement past that. If we continue to move beyond that, meet these highs, like Mike talked about, then yeah, we're going to see a continued bull on the dollar and just as well, more than likely, that bull on indexes as well. So I'm already liking what I'm seeing right now on US 30. So I got some targets lined out here on, let me see, I think the weekly, right, where we have that yearly 50% marked out. So if you go ahead and measure your yearly candle, it'll land right up in this area where we did not get a full fill of this imbalance here in the weekly off of this bullish engulfing that we pushed off on, right? Came down, sold pretty hard, and then the following week, we got a push down and a full push up. So that being said, I think we're going to get some continuation to the downside earlier here, in the year, maybe earlier in these, next month or so. And then once that support is found, I'll be looking for sure to buy. I'm also liking the RSI, right? As we have the break of the bullish run we had, right? We're looking at a nice head and shoulders pattern. I'm going to be looking for a retest coming into this week to get that continuation. And then that should push us, as far as the RSI is concerned, right down into that 30, maybe even lower, extending past the previous, and then maybe get a push up there and after that. As far as NAS 100 is concerned, I'm looking at the same kind of idea. I want to get another push down Same on the RSI. We got a good, good amount of pips to go before we even reach that 30 on this end. So I'll be looking for a push here into about 19,600, 19,500 area. Get a support made, wait for your candlestick patterns, wait for some type of support at that area to be created before we jump right in. And just like we talked about the other day, Steve, we went over looking at these in history. When are they making these adjustments and making these moves to go bullish on indices? And typically that Wednesday, Thursday time frame, giving out game to you guys out there. So keep an idea of that as you go into, the next week or two. Not really looking, I don't really look at SPX too often, but we do have that same idea of these fair value gaps that were left open here. This is our 50% level as far as the yearly is concerned at 5,400, but I think we may find some interest here at our quarter point at 55, right? Once those fill, I'll be looking to see, what it decides to do in this area. We got a lot of, volume here. We've got some support that was created here in July and then again here in August, but then that was broken, right? Didn't even care. So we'll keep an eye on SPX as NAS and US 30 approach. You guys follow the same, but we are already given that same head and shoulders pattern, right? So we already got the idea of the bears wanting to get involved. So I'll be looking this week, again, same thing, that retracement onto this daily candle before taking that next sell opportunity. Other than that, man, I mean, these are going to be hot for me this year, especially with us trading Top Step, which will be locked in starting tomorrow on Top Step. I'm looking at gold. I'm looking at silver sells as well. I really like silver only because we have this beautiful head and shoulders pattern here. And we have this imbalance up at 31.45, 687. So I would like to see what happens once that is reached, maybe earlier in the week. If we can get to that, fill up that fair value gap, I'd love to see a potential sell opportunity there. But I'm going to pay attention to this support level at 26, 25, 865 is of interest to me, and I'll go over why on a higher time frame. But we have to break the previous support that was created here at 29.69, 863, right? Right at where that double bottom is. We got the nice neckline there. There is a gap there as well. We have a fair value gap even in the double bottom. So we'll see what happens with the dollar approaching its targets, getting bullish. Once it makes that turnaround that Mike talked about, then we'll probably start to see silver and gold start to track back up to the upside. But as far as the year was concerned, really, really strong, right? Nice, strong year, but we closed right back below that previous resistance level. So that's why I have the idea of us coming in to fill up the full yearly imbalance here at 25,865. So that'll be my main target for another potential buy opportunity. But until then, I am looking to sell and hopefully get that imbalance filled. Other than that, looking at JPY, nice strong double bottoms here in the yearly. We've talked about that early beginning of last year. So now we're getting in, we're starting to see the bulls, or beginning of last year I talked about this double bottom, but we didn't get the full retracement, which is fine. This year we're already getting it out the gate. So hoping to find some support here at the imbalance fill at 180, 188, 189 area. Looks really good. As we go down into the lower time frames, I'm going to go into the weekly to give you guys a viewpoint of that, right? That is where we previously had this nice wick, right? That started the bullish move we see, but created a double top. So as we come back down, maybe we can reach this area and get, a real fill, a real candle close that will tell us this is going to be a support, right? If it does, fantastic. I think we can get some further movement. Let's go into the daily real quick. And the other thing we have here, I guess that kind of filled up there. So this fair value gap here, 191,590. So I want to explain why I have this support here at this level. So just stay aware, it's really strong on the bearish side right now. We've got 3 what here, guys?
Three black pros.
That's right. That's right. So it's looking good on the seller's position as we get into this. So I'll be looking for some type of, retracement, matching what we kind of have here on the left before taking my next sell here on GJ. Euro JPY, nice double top, same scenario. I want to see that pull up come first before getting that next sell opportunity on EJ. And then for AJ, I've got the same idea. Really strong sell here from last week on the daily. Potential targets. We do have the fair value gap that was left at 95,133. And if we can get beyond that, then we'll possibly see 92,230 once again, because we never really got that fill. And on the smaller time frames, which we'll go to as we go through as we approach that target, what happened there on the 4 hour and the hour, why I have that marked up. UJ is going to be an interesting one because we have that dollar strength, right? So if the dollar stays as strong as it does, then this might find some immediate support. Let me go into the weekly. Hold on. Come on.
Is AJ back to
Yeah, I got you.
GJ
Which one?
and AJ?
GJ. Got you.
And AJ.
So here we are. So we have the support level, right, created here at 154,872, where we got an immediate rejection, pretty strong, came back out the gate. So potentially, as we go into this next week, if the dollar reacts to yen first, then you'll see, the sell-off happen and then support found. But if we react to the dollar and the dollar strength that comes in this week, then it'll just continue, right? And we'll hit some immediate supports before coming back down to address these situations that are, at the bottom here. Let's go check out. You're talking about GJ. What time frame?
The one that you were just looking at.
That might have been a daily. There?
Yep. Yeah. Two things. For one, talking about correlation. Any idea what correlates with GJ during New York session?
I know. Not gonna give it away.
Jeez. GJ.
Kind of a trick question.
Do they? Do they correlate? They have to.
What?
Yen?
No, it's not. It's funny. It's not a currency. That's the trick part of it. It's not a currency. It correlates with US 30, which is weird. When you see US 30 when the stock market is live, you'll see that similar moves around GJ. So if you're trading GJ, you can trade US 30 if you're doing or vice versa. Or if you want to protect your funds and not over leverage or worry about high cost and pips, right? US 30, marking up US 30, expecting it to come down or go up, just go trade GJ. It's less expensive.
Yep.
The other thing that supports what you're talking about here, Zay, zoom out on that. Right. Okay. So look at your resistance that happened at 199.
Yep.
And then look at the support that happened after that. Right. And then look at the moves, the bullish moves that have happened with the highs recently. What pattern is that?
Are you talking about the new double top we got here, or are you looking left?
Here, I'll annotate it.
Yeah, go ahead.
Looks like a rising wedge.
I don't have annotation. That sucks.
Are they hiding it? It should be this little pencil in the bottom.
Oh, yeah. In the bottom
corner. Yeah, they moved it.
Hey, impulse move down, right?
Oh, yeah.
What is that?
That's a rising wedge.
Nope. Rising wedge has a bullish impulse with consolidation.
Down.
That's a rising wedge.
So a flag.
There we go.
Yes, bearish flag, correct. All right, now do me a favor, Zay. Go to AJ. What are we looking at? Similar shit, right? And not just from that perspective, but also from this one. Smaller
Yep.
version.
A lot of bearish signs coming in on these guys.
This literally could just break, retest, and then drop again.
Oops. Got it. And when you have them set up like this, guys, there's, like he said, man, there's no reason to make it hard on yourself. Keep it simple, keep it easy. If it's this obvious to you, trade that. There's your one of your three pairs that you got a solid opportunity on. You don't got to make this thing difficult at all. So any questions? Any questions? Because this is gonna be my list for probably like the next 3 months. It's probably all I'm gonna be looking at. No, nothing. Everybody's solid.
USD CAD, same thing.
USD CAD. So what are we anticipating, right? Already, as far as the dollar's concerned.
Well, considering I guess a rise and a drop.
Okay, so when I'm looking at this already, right? It's been bullish, it's been extremely bullish. Last week, the last 4 days, we had the drop down retest, filled up some gaps. Let's see, as far as this being a valid support level. All right, so it looks like, I mean, to me, we're going to be approaching this target at 146.705, right? So if I got a bullish dollar and I've got a nice bullish flag here, right? I'm looking for one, can I get a retest within this, get a breakout, retest, and get that rise to really meet that top side at 146.705 before you have any ideas of sells. And you know, you can always bounce this back once it gets to that location, go check the dollar, see where that's at. If that's preparing for its sell opportunity, then you know, bang bang, you in there and you're prepared. And Mike, if you got anything to add, feel free.
I think people are probably tired of hearing my voice right now, but
So that's what I would be looking at as far as USD CAD concerned, staying in line with what I'm expecting, you know, the dollar to do as well. Check oil real quick.
oil is going to be a real interesting one this year. Oil is going to be a real interesting one. Because that thing could be sent right all the way back up because this could be a teacup.
Mm-hmm. So I'll just give you guys an idea of what he's looking at. Do I have, I don't even know if I've had that in my favorites. Where are you at?
Should be like where the continuation the arrows are. It should be the arc right there at the bottom.
Yeah. Cool. Hey, I'm with it. We had a very recent bearish break. We are at previous resistance, of course. So this may entice us a little, you know, retracement back to retest. Let's see what that resistance level is. Right around 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. 75.3. 3. and then maybe look at that there. So what I like about this too is that, from my knowledge of correlation, let me see, hold on, did I miss something? Okay. Um, to give to you guys on US oil and USD CAD is that they're opposites of each other. So if we're seeing USD CAD starting to approach a strong resistance target, one that will tell you to come back here, look at your daily, look on oil and see if oil's now reached its support target, right? It's coming down. If USD CAD's going up, US oil, they should flop, right? We should start to see sell hit off on USD CAD at that strongest point, start coming down, and that will entice us to know, oil is going to follow suit as far as going bullish after that point. So I'm actually going to add that to my list because I really like that. I like that, and I like USD CAD coming to such a strong resistance points there. Let me go look at the weekly. So third time's a charm, right? Nice triple top would be beautiful to happen right about there. I don't need Chris. Let's go look at anything else of interest. Also, like, man, if you're also looking, we're way outside in the RSI as far as the weekly is concerned on USD CAD. So let's knock out some of those early sellers and then come on back down. So thanks for bringing that one up. So, and we'll keep track of it, man. Now that I have it in my red list, we'll definitely keep track of it. Hey, what's going on, Tay?
Yeah, what's going on?
I am just finishing up. We went through indices. Mike's done his spiel on economics fundamentals. I think we've covered a lot today. Tay, you're more than welcome to tap in, finish this with your view that you got on gold.
Hey, we do
Back in the
regular because
building.
I got some family stuff going on, so I just got some free time.
Nice.
My stuff is gonna be weird this year since we have a lot of things going on economically. I'm pretty sure Mike talked about a lot of this stuff going on with the new president taking over in a couple of days. Um, a lot of things that we know when we did this, what, 4 years ago? A lot of things started shaking, a lot of movements started happening that we were very sporadic about throughout the years. Whenever Trump was in office the last time, he was known for dropping a mean tweet and shaking up my week or my day or my month. So if you've been
Those were the
trading,
days.
yeah, Steve and Trey, you'll start to see that you'll see something going a certain way. The same kind of movements we were seeing for NFP, we're seeing for basically for Trump whenever he was dropping his mean tweets out. And so he's back in office. He's gonna be doing the same stuff he did before. So as you can see right now, he's talking about what's going on with Canada. They're having talk about having tariffs, reverse tariffs coming out of Canada for us to try to alleviate them not trying to get taxed for some stuff. So the other people are trying to push back against it. And there's a conversation about how economics are going to be for the next 4 to probably 10 years that's going on in the next year. So for gold, anytime people start to worry about anything within the economy or in the world, first thing people do is start hoarding the gold. So it's literally the go-to. So I really ain't got to show you a map. I ain't got to show you much this year. If you see where gold is at, if it comes down, you buy gold, you hold it. I'm telling you right now, wherever gold is at right now, I can almost guarantee. I won't say guarantee, but I can tell you right now. We can look at the map where it was 4 years ago when he took over, and we look at it 4 years before that, before he became in office, and it's at a huge difference in time from that point. So I'll take a look at it real quick. Let's just point that out real quick, and then we'll look into how we get into gold and how do we trade it long term and just hold it, or do we try to take some little snippets at it? So let me see. I can hit the share button here.
Well, I think the first thing that's very important is that everybody needs, I don't care if you use it or not, just have his notifications turned on. Go sign up for X.
Yeah, because all you'll do is drop everything
For
on X.
sure. For sure.
That man is very, very big on that stuff. So let's see. He took over office in what, 2021. We got out of office in 2021, and he took over in 2017. So let's look at 2017 for gold. Let's take a look at it. We'll say January 2017 because that's probably when he took over. So we're here, Jan 2017. Let's a little circle real quick so I can remember where it's at. So that's our price point here. We're at what about 1182? We're converted where we are 2789, which that's normal to happen. We talk about growth, but that kind of growth over the time when we look at it over the scale, as those last 8 years was a huge increase. So we got from 2017, this is 2018, not too much of a jump. And then he left in 2021. Let's say January again, 2021 January. Boom. So here we are. Draw a circle again here. So we go from, let's get at the bottom here. So we go from 8 to 1846. So we go from 11 to 1846. So it's almost like it's over a $700 increase per share over those 4 years. So about, we could say $200 a year if we're going to say on average. And then we go from 2021 to 2024 January. Say 2025, which would be now, but we didn't see much movement here. It consolidated almost the entire time for Biden's presidential until the last year. So up into where we at? So we look at January 2024, we have it here at 2000. So that's a $200 increase per share. And then the next year, why they're trying to figure out who's going to be the next president of the United States, this thing massively jumps for the entire year run from, was it, we can say, here we go. We'll say from 2000 to 2700 in a year. So all the movements we saw happen back here for Trump, his entire movement from 2017 here to 2021, all this stuff happened in the last year. Almost very similar to this one. Because this one just consolidated for that time period from 17 and 19. And then we get to 20 and everything shoots up for the new election. And then everything consolidates again into this last year and does the exact same thing. So if we're looking at this having the same thing, we're probably going to see something very similar happen. Which, if we wanted to look at every election and see how that affects it, we can look at their market and see how Republicans, Democrats affect gold on a scale. Things that we used to talk about a long time ago when I first started trading was that, hey, during the summer months, gold goes up a bunch because a lot of weddings are going on. That's one of the big things Mike would say all the time. Hey, but it seems like elections are also a big part of that at the end, where we start to see, hey, there's a new turning event, there's a new taking over. Things start making those big moves. People start collecting a lot of gold because of the indecisions that they don't know for the next year. That's what it seems like. So we're gonna look at gold to say, hey, gold's probably gonna consolidate for a couple years, which means we can probably get some big money into it, but it's gonna buy. So if we can look for a lower end, because we're looking at this right now on a monthly. If I can look at it on a yearly, 12 months, gold had a not as great as year as it did the year before, 2024. 2025 is just starting, so this is a brand new year. So anytime I see this on a chart, normally we'll start to see growth. So this is gonna keep buying. Like, we're gonna get back to 2789. Like, I'm gonna see that we'll probably see 2789 this year, based on how growth happens. If it doesn't get here, it's gonna wick here because a lot of those movements are happening within those wicks. So we're gonna see that movement happen. The question is when and how do we get into it? So if I'm looking at it, I think I did something like this similar last year, is that I was waiting on this drop to happen. So I was coming back up to here. We're waiting on this drop to happen. I'm waiting for this drop back to 24.42 if possible, and potentially lower if it gets lower than that. But 24.42 is my number. Everything is overbought right now on monthly averages, or as you see for the RSIs. So, and it's been overbought for a minute. Weeklies, it's about to cross over. Dailies already crossed over. These things are about to start falling. So gold is about to start coming down because we now know that who's about to take over and all these things are about to start coming down. But then we're going to consolidate it and spend the money up. So we're just looking for that pullback to happen so that we can buy it and then hold it. I don't hear the noise. I appreciate it though. So I don't hear the noise, but I appreciate it though. Say hello. Say hi. Say bye. All right, later. You being a, come on, sir. We're doing class. We're in a class right now. So those are the things that we're looking at for gold this year. I'm looking at gold to continue to make those buys. I think last year we said that we are going to buy. The year before we said we was going to buy, and hey, gold is just easy buys like right now because everybody's so worried about what's going on in the world that gold is going to keep appreciating in value. It's going to keep its value. So
There's one other factor that goes with that, Tay.
What's up?
We're going back to the gold standard.
Hey, that works too. See, even when I don't know stuff, it just makes sense to me, you know.
It all adds up.
Yeah, the chart just makes sense. So all I'm looking for is a long-term buy. So if I go off of my old mentor, I never met her, but the gold digger, I'm looking to try to get this into a nice little spot here. Probably if I get to 2400 would be a great number for me to get back down to, buy a bunch of it up, and then just sit on it for the next year or two. We're gonna see. We're probably gonna see what these averages are. It's been $1,600 in the last 8 years. So $1,600 a share in the last 8 years is good numbers.
So this is why though you trade gold as the value, but your physical ownership should all be silver.
Yeah. You can't. Yeah, I'm gonna get back to what's the name? I might buy some gold bars though when I get to what's the name though? UAE. Because they used to have them on the vending machines. I'm gonna get my hands on some gold and put in stored away somewhere.
You gonna spend $2,500 on an ounce of gold?
I got the money, so yeah.
Hey, sorry, big baller. Me, I'd rather take 2,500 and buy what 100, almost 100 pieces of silver, 100 ounces of silver.
We're talking about security though. So now we get into the market of we have the money. Then what do we do with the security we have? So
Right.
when you have the money, then you provide security with the money. It's a fail safe. Gold
Yeah,
bars
I mean, you
is
can't
a
lose
fail
either
safe.
way.
Yeah,
You can't lose with those either way. Precious metals are going to be in high demand.
correct. So
No
if I
matter
put it,
like,
if I try to buy in the market and they decide to do what they did 3 years ago, which is put a pause on the market when I can't take my money in and out until they figure out what's going on, then I'm in a bind with my money. But if I got solid security, I have physical security, then I'm they can't do nothing. I can just take that money to where I need to, and hey, trade this in. I, I, I need money on hand right now, sir. So yeah, cool.
Makes sense to me.
As I see some stuff, I'll start to build the charts out. Um, my year's gonna be trying to tied it up for me. I deploy in October, and then I got TDYs out the wazoo for the next like 3 or 4 months. Actually, like the next 6 months. So I'll be in and out of here for a minute. So when I get a chance, I jump on a chart. All right. But yeah, when I get a chance, I'll jump in here. But I got you guys. If I see anything in the chats like I did for Steve or anybody got questions, if I got some time, I'll jump on the charts and look at some stuff. How was those trades anyway, Steve? I didn't get a chance to talk to you about those yet.
What you talking about for all the pairs I told you about?
Yeah.
Okay, so a few of the pairs hit, and then some went down to the opposite side. So, like I said, I think I just got caught in I think I got caught just trying to revenge trade for XPX. That kind of kicked my ass this week, but I was able to mitigate my losses.
Okay.
So, but I think that the big thing is like I was even
I heard you.
y'all was that, with this coming year, I got my pairs I want to run with, but I guess even with the A+ setups, I mean, would you still recommend I might do one trade per pair a week, just to start out if I'm about to go live, just protect my account. I mean, or if I see a good setup, I should just take maybe 2 a week, depending on the pair.
I do whatever your trading plan tells you to do. So if your trading plan says that you're trying to get 40 pips a week and you get the 40 pips, get your 40 pips and then trade demo for the rest of the week. So that's anything that you feel like, hey, this might hit, or I'm curious about it, you can always trade demo so that you can continue with that confidence. Demos are not going away for you, so you can still demo and go live at the same time. So if you like unsure about some stuff, but you want to see how it's gonna play out, try it out on demo. The stuff that you like, okay, this is one of my A+ setups. Just hit that thing on a live, And then if you like, oh, this is another one I'm seeing, that's up to you. What's in your trading plan? If you're already over your 40 pips and you say, you know what, if I see something that's another A plus, I want to hit it too, hit it. But if it has to be within a certain like parameter. So remember we talked about we don't do 1 to 2 trades, like 2 to 1s. Like maybe this is a 4 to 1. You're like, oh, this is a 4 to 1. The risk is 25 cents for $1. Then hey, if I see a 1 to 4, I gotta take it. Or if I see a 1 to 5, I gotta take it. Those are the things that you put in your trading plan so that when you see it, you're not thinking about it. It's like, okay, it's no emotion in it. Like you don't feel bad that you didn't take it. Like you're not even thinking about it. Like, oh, well, this is outside my parameter, so on to the next one.
Yeah, Zay brought up a good point. I think this was like a week and a half ago about, you don't want to waste trades, just because you're bored. So, yeah, I'm really like taking that and I'm thinking, okay, if I have like maybe like say one bullet to shoot off per pair a week, then, I'll find my A plus setup to, set up that trade. And then, like you were saying, just, trade the rest of the market on demo just so I can, like I said, be locked in. Because especially like when I'm thinking about dealing with real money, I'm like, okay, maybe, really protect my assets and, like just use it sparingly until I can build that account up. So, yeah, that's a good point.
You gotta treat live like demos. If you treat lives any different, you're gonna put yourself in a bind. Do not and you say it's real money, but it's still the same dollars. Like it's still the same money. If you try to protect it more, then you're not gonna get what you want to get to. Just treat it the same way you did in demo, you're gonna do fine.
Okay, got it.
Yep. The year of discipline, guys. The year of discipline. Follow your plan. Stay strict with yourself, and you'll be all right. That's what's going to build that confidence. So cool. All right. So to wrap it up, guys, that was your yearly overview. I wanted to get into the meat and potatoes of everything. To close us out, I want to thank everybody for being here. Our fundamentals, basic expert, economic expert, Mike, for tapping in. I'm glad you were able to give a bunch of game on what we did see and what we're seeing right now. Tay, thanks for taking the time out, man. I know you stay busy to come in and give us a little game on gold. Is much appreciated. I'm sure these guys can take notes and take this and really be successful this year. Like this can be a game-changing year with Trump in office. I was very successful during my years when Trump was in office. It was very easy to follow. That's when I had my first like $100 to $3,000 run. So it can change for you. You just got to stay disciplined. Have your plan, follow your plan. It could all be different for you 4 years from now, but only if you take advantage, only if you stay consistent, only if you show up and do what you say you're going to do. Otherwise, you'll still be in the same place right now, but you'll be there 4 years from now anyway. So the time's going to go. And if you say this is what you want to do, then show up and make it happen. That's the only thing that changed for all of us, for the three of us, is making that happen. I want to open the floor as we close out to Steven Jackson. Just to talk on your experience with us thus far. We're only two years in, but we've been able to give you guys a lot of value. So I want to see where you guys are from where you guys started.
Yeah, like, a big thing for me personally is that, I came from another trading platform with IM Academy. And, I felt that, they really made it complicated for me. And so, I was telling myself to kind of stick with it. I knew it was going to be a viable option for me in the future. But then, when I got in touch with you and, Michael and Tay, you really made it simple for me. And I think that was the big thing for me is that even though, I wasn't the fastest learner, I knew like once I was able to stick with it and keep it simple, then it was going to manifest one day. So now like I'm built the confidence to where okay, I think I can go live now. And I think at this point, just keep building those habits that y'all are talking about. I think the trading plan has really made a difference for me. And I think as my account grows, then that will just help make me more empowered as far as knowing about what's going on around me in the world financially. And that's the multiplier. Knowledge is my multiplier. And the more I'm equipped with knowledge, then that will help me make better decisions going forward in the future.
Most definitely, most definitely. Well, glad that we could help you make that happen and make that transition, man. It's really a mental game. If you stick with it, I'm telling you guys, you can really change your life from where you are. And no matter when it happens, like it's not one of those things where you can put a timeline on it. It's everybody learns different. Everybody takes in information different. Everybody puts information into action at different times. So, glad you made it thus far and you're starting to see that happen for you.
Thanks.
For sure, for sure. What about you, Jackson?
Overall journey for me, man, it's gone from like purely luck on guessing and trying to learn to actually implementing strategies, reading the chart. 2024 mostly. I mean, as you already know, and then Mike knows part of it too, Tay as well. It's been mostly mental, breaking through those barriers with little habits in myself, things that I have to give up. Um, and I mean, I could say it was a fail for the year. Like if we're looking at like the money side of things, but honestly, I've learned a lot more in like the L's that I've taken in 2024. You know, like getting close, getting funded, blowing the funded accounts, to where now I actually have a solid plan going into 2025. And I don't know, I feel more confident in myself. The fears, the money blueprint that I carried over, like from family to a little subtle bad mismanagement of money on my end, to just having to be smarter, and just my all around, my overall, like how I handle my funds outside of trading, uh, to protecting in trading. I'm not too sure if that makes sense. Like, I mean,
I'm with you.
the best way I've been, yeah, the best way I've been explaining to everybody is like, 2024 has been a year of exposure, exposing myself, tearing off the mask, um, identifying things, and then I think 2025 is more so executing on things I was scared to execute on before. Um, Having more confidence to kind of just let it ride, let it go, and if I take the L, I take the L. If I don't, I don't. So that's just kind of where I'm at right now.
Word. There's nothing wrong with that, man. We all learn from our losses. We all can tell you that in the beginning we took a lot of L's. We've lost a lot of money, getting this skill set honed and established. But once you got it, you got it. You got it forever. So you learned. That's the biggest part, man. You learn from it. And now you can establish, some boundaries for yourself, some disciplines that you need to instill this year, and stick with it.
Most yeah. Okay. I think I got a better explanation. My ego. That's the ego. When you think you know more than the instructors, and you think you can carry more, and then the instructors will let you ride, and then you learn why they say what they say. That's probably the better way to put that. Yeah.
Oh yeah, the market will humble you. You're muted.
It's fine though. Like so, having an ego is fine. Like I said, when I was learning, Mike would be like this, and I'm like, Mike, it's not that, and he'll be like, all right, man. And I'm like, I go take that L, and I'm like, oh, all right, whatever, man. Let me look into it more because I must be seeing something he's not seeing. Or man, me and Zay, when we first were learning, we were building heads a bunch. Because I'll see something and he would not. He'd be like, I'm seeing something totally different. I'm like, well, we'll see who's right then. We'll see who's right then. So like, it's just that's kind of the part of the race too. Like you're trying to be competitive in it, which is perfectly fine with it. That's part of what put me in a better light too. Is like I'm really ego based. Like I like winning. And when I take L's, I'm like, I want to know why I lost. And then if I now I'm, and I took breaks too because of it. I took a lot of breaks because like Zay will be hitting, Zay will like, oh, I'm up, and I'm like, I am not. I am the opposite. Let me sit somewhere to take a break for a couple of minutes. Let me like look for about a week or two, and then he'll hit me up like, what are you doing? Where your charts at? I'm like, oh yeah, let me look at him again because I was trying to give up. I'm like, that's better for me just to not look at these anymore than versus like having these issues. So like your ego can humble you. Markets will humble you, especially when we talk about real money. Real money, like
A different ball game.
it's a different ball game because now you're seeing
Yeah.
your margins play out, everything else starts playing out. It's because
Mhm.
of different beast.
Oh yeah. Oh yeah. But it helps, man. And having me and Tay and Mike here, having the team here, having the squad is what's going to keep you, entwined through those losses, right? It's going to keep you coming back because there's some things you might not have taken into consideration. But take a break. If you need to take a break, take a break because that's going to let you refresh, right? But when you come back into it, use your support systems. We here. We got each other because this is the thing that we said we going to utilize to get to, our financial independence and our financial freedom, being able to step away from a job and just have, entire family time. That's even why I got into it to begin with, is to be more with my family than I am having to be with a job, and to protect myself. As we know, AI is taking jobs and all this going on. It's going to be less and less careers out here. So in my mind, I'm still going to be able to trade no matter what happens. I'm still going to be able to get my money out of the market for as long as the opportunity is there to do so. So it's a way to protect yourself in the long run as well. All right.
We saw Bitcoin.
Any?
We saw Bitcoin years ago. Saw
Oh my
X.
God! At 17,000.
Saw XRP years ago. XRP was
Uh,
fucking pennies.
right. It
Pennies
was
is it's like
nothing.
Less than pennies.
less than pennies is like it's like $2 and something cents now.
Uh-huh.
Like even if you like trading, I don't know if I want to do it. Like even seeing things and seeing how they're gonna play out and then watching them play out over 4 or 5 years now, it's
Yeah.
like it's crazy.
You get this like fortune teller type of feel, man. It's
No,
real wild.
it's worse than that. You sound like that conspiracy theorist now. Like you're a crazy guy. Like I'm the crazy guy that I walk into a room. People like, oh man, oh yeah, Dogecoin. I'm like, don't touch that. I'm the XRP. Buy as much as you can. Buy all the XRP you can right now. Why? Why? It's not. It's
What?
nothing. Buy it. Buy it. Buy it.
You become that guy.
Yeah.
You
People like
That's
become
XRP.
that
funny
guy.
because we were just before you hopped on, Tay, we were talking about Doge.
Yeah, and XRP.
Yep. So it's funny that you brought those up.
But it's that insight, man. It's that insight that makes a big difference, right? And you can prepare for the future way different than most people can, you know. So, hey, man, I appreciate everybody's time. We continue to do great things. We're gonna continue to change as many lives as we can. Doing what we do, man, what we love to do. I love hopping on here with you guys, the opportunities we get to, and really talk this out. So I'm prepared for a very, very phenomenal year. I hope you guys are as well.
Absolutely.
Um, and for tomorrow, we'll be on for Top Step. So if you guys out there, in YouTube land and shit don't know, we're working on getting those Top Step challenges passed. Show you guys some insight on how to utilize your plan to your advantage, so you can actually work with more capital and you don't have to use, a small amount of capital. To have that type of opportunity just makes sense right now. You're using a little bit of money, $50, you can do a Top Step challenge, get 50K and work from that than to work from, a few $100. I think it's just smarter to do that. Then you could take that money that you make off of that and, put 7,000 in, 10,000 in, and trade from that on your own live account. So that just makes more sense to me, especially if I was in the position y'all are in. Like when I was in the military, senior airman, with my little few $100 I'm trying to build on. It was not the smartest play, but I also didn't have this available. I wish I did, and if I did, it'd be completely different back then. So utilize that to your advantage, and we're gonna help y'all do that tomorrow, starting tomorrow. All right.
Or, yo, quick question.
Yeah.
Yeah, for Top Step, instead of like the 50, wouldn't you just say it's like 200, considering like you got to activate your live account when you do pass?
Well, it just depends on where you are. I mean, if you got it, of course, do it. If you got it to get it, get it.
No, not for the
Well,
initial
because
purpose.
he's talking about the activation fee after the
Yeah,
50.
when you
Oh,
when you pass, you have to pay the activation. So I was asking like, yeah, start with the 50K with your 50, but also keep in mind you got to pay that 149.
right. There's 149 after, which that they should tell you that up front. If they don't, then they're wrong for that. But yeah, pay the 50, pass the 50K in the beginning, or the 100K, whatever it is you're gonna be doing challenge wise, and then you got that to get the second part is 150. But then you got the account, right? You're good. And by then, if you can't be good money management, man, be good with managing your money so you can partake in this. There are other challenges that are out there. If you're in the group and you're in the Discord, I've posted a few of those that are still active funding challenges that might be like 150 one-time payouts. Some of them are two-step challenges. Some of them are one-step challenges. Some of them have no step, but they're way more expensive. It might be like $1,000, and you don't even have to do a step challenge part. But I find Top Step to be affordable for every common individual right now. Then just save, just put money away. If you got to put $10 away every day towards that, do that.
So you would say Top Step would be a good like to and like I guess a good starter to like get in like if I don't have like a 3 grand to put in for my live account.
Right,
Yep.
right.
100%.
Because, and the thing about it too is it's going to hold you accountable. And that's what people try to avoid. They try to avoid the accountability part. You have got to be strict with yourself. You have got to, be precise with your trades. You cannot overtrade or you damn sure going to blow that thing. So you got to be disciplined to pass a challenge account. If you don't, they're going to show you. You're going to get put on Front Street.
Okay, so yeah, I learn more. I have to learn more about that because I think that might be the how I can go live.
Yeah, nothing wrong with it. And you get to practice, right? I know Mike was practicing end of last year on like 150. So
Yep, I'm working on. I actually am working on my Top Step account. I stopped after that first trade, so I got busy with the food truck and whatnot in the
yeah,
holidays.
yeah,
But yeah, I mean, yeah, it's an excuse. I should be able to hop on whenever. But
and we'll
if
be
I'm
on
missing these
together.
times, either way, I'll be working on mine, so we can all do it together.
That's right. All right. Cool. Appreciate y'all time. I will holla at y'all tomorrow. That is your yearly overview, guys.
Thank you.
Let's make it a great one.
Let's do it.